what's the purpose of this, right?
Yeah.
And so, yeah, I think the initial reaction is great. Hey, things are on sale. I should buy. But again, trying to hop in, hop out, and 6 months from now, we're hoping that 50,000 now worth 60. Or how are we going to feel if things turn sour? To your point, and now that money we were supposed to use for a house is worth 30 instead of 50. That's not a conversation personally that I'd like to have with my significant other.
No,
Um,
no. I will tell you that as the advisor, I'm going to make sure that you're both on the call if you're choosing to do that, and you understand the ramifications. I mean, I had clients who've done that in the past. I think it was coming out of the 2022 bear. They chose to put some of their money, not all of it, but some of their money for the down payment into some of the markets. And it was for a purchase that happened this year. So it was 3 years out, right? So we looked at the kind of the risk and return profile and what was the potential upside, what was more importantly, what were the potential downsides. And it was a choice that they got to make. And it's everyone's different because we do it. It's always, or investing is always uncertain for short periods of time. For long periods of time, it's actually close to certain, right? Over 20-year rolling periods, the S&P 500 has yet to be down. I do say yet because it potentially could be. But when we have a history now of almost 100 years, we've seen that it's over that length of time, it's positive.
Right. And what is it? I remember looking at that chart. We don't have it available, but it's almost like a coin toss day to day where
It's
we
literally
don't
like
know.
51.49. Yeah.
Right. And then, I can't remember what the next increment is, if it's a week, a month, a
We'll
quarter,
we'll
or
get
if
them
it's
slightly wrong, but it literally, I do this with students at a high school that I'll speak at like once a year, and I'll say, which investment option would you like, right? And so it's like A is 51.49 win loss, and then
right.
B is 70-30
I think that's
ish.
a year mark. Yeah.
Yeah, I think so. And then the 5-year mark is something like 85-15, and I think the 10-year mark's like 90-10, and the 20-year mark's 100-0, right? And everyone chooses 100-0. And then you go, well, cool, but you have to be comfortable with A through D to get E.
Right. And it never looks like a straight line to get there, does it?
No, never. It's always crazy. Yeah, I think that would be the view that I'd want to know for this person to put this money to work. The other question would just be like, what are they, because they said short to midterm gains. And to me, that probably means they're putting it to work in a taxable account that they can access.
Right.
And that's why I asked the question about savings rate, because like if they have a low savings rate and they're underfunding retirement as is right now, that might be a good conversation to have. I'm like, hey, can we put some of this to work for your future self versus your intermediate self? Or at least have that, let them think about that.